Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In each episode, we cover all things from the world of trading and we answer your burning trading questions.
Well, let's give it a go then.
Yeah, let's do it. So, big title for this episode, Defining Moments. We're going to talk a little bit about different defining moments that we've both been through as traders and what we're seeing right now, because we think it's a really interesting time to go. So, over to you, mate.
Yeah, when it comes to defining market moments, we can look back over the last 20 odd years. We can start with the tech bubble and the build up, the boom in the late 90s when I was active in equities a lot more. The whole tech bubble going into that and the fallout, the NASDAQ falling 90% after all of that. And then you got the great financial crisis. So yes, there are defining moments that we'll look back on, and we still look back on to this day as historic moments in the markets. And so there are. Now, it doesn't mean to say that every defining moment is a stock market crash, even though I've just picked out two. Yeah. But we are potentially in a defining market moment right now. My belief is that, but we're going to have a chat about that. But do you want to talk about another defining moment?
Well, yeah, I thought this one is more personal, and you experienced it as well. It's when the Swiss franc was unpegged from the euro, and the guy on the street won't. If I speak to anyone out there and say, "Oh, do you remember the day when this happened?" People look at me weirdly. Versus they remember, people remember the recent financial crisis of 2008. But I think it was quite a pivotal moment within the industry. I remember two brokers going bust as a result of it. There was a huge issue of liquidity and stuff going on during the day. And I can remember because I was actually in a position. I was long. I was literally sat there and watched the market just fall away. And it's the only time this has ever happened to me where the market moved so quickly, I couldn't keep up with the movement by trying to scroll down on my screen. The screen was just moving. The market was moving so fast because essentially what happened is the Swiss National Bank decided to unpeg themselves from the euro and told about 3 people they were going to do it. And the market had no clue and things, it just fell away. But so to the average person on the street, that's probably not necessarily a defining moment they would know. But as a trader going through an experience at that time, I remember that happening and thinking, my trade was stopped out at its stop, but my first thought was I'm going to get requoted by the end of the day because there's just no way I'm going to be out at my stop because the market moved so quickly. And I was requoted. I ended up with about, I think, 6.5% loss on what was a 1%. And I was about to say the horror stories that came out off the back of it. And I think the lesson to the listeners is this is why you risk 1%. You don't risk 10% per trade because those black swan moments that never happen end up happening.
Yeah, no, absolutely, it was, and you're right. It was a material moment, but it was only a material moment for people who were trading the Swiss pairs in the main. And but it was. We all remember, 3,000 pips on the day during the day. Actually, some brokers couldn't even quote a price, and so it was that. There was no liquidity, and so quite something. So there's a couple of examples that we've picked, but what about now? Let's talk about we're in the moment right now of something which we could be looking back in 5 years' time saying that was a significant moment there. And that is, as we are recording this in April of 2025, the Trump administration have just imposed tariffs globally on a huge number of countries and economies globally. Now, you and I have already talked about this. We know that what's probably going to happen is a lot of those tariffs will be drawn down a little bit. They won't quite be as high as the initial announcements. But nevertheless, this is a significant historic moment. We haven't seen tariffs this high in over 100 years. So we have to take note of that. And what are the implications going forwards? So yes, they'll probably be dialed down and they'll be negotiated and whatever, but it's still a significant event. And so what are the fallouts from that event? And my personal belief is, and this is nothing political at all. It's like, where's the opportunities? As a trader, you're looking at the opportunities here. And I think the US dollar post World War II has been the world's reserve currency. And is this going to take some of the shine off of the US dollar as economies say, maybe our relationships with the US isn't quite as good as it used to be. Still good, but maybe we feel that maybe we shouldn't have quite as much money parked in US treasuries and equities and real estate, whatever. And maybe we should be doing business with other trading partners a little bit more than we were. And so I think that we're going to get 5 years down the line looking back at where we are today, and we'll say, yes, that was a material event. It's not an event like the Swiss National Bank crisis.
No.
So it's nothing like that. This is a slow burner, I believe, because the US dollar is going to continue to be the world's reserve currency for years. But nevertheless, has some of that shine, if some of that shine is coming off, we'll look back in 5 years' time saying, wow, look what happened there.
Yeah. I think if you look at the current pieces that are on the table, America are trying to, reduce their spending, become more efficient, and they're looking at Trump looks at everything from a business point of view. And again, this is outside of what you think of him and what you believe politically. He's looking at it as he's looking at USA Limited, and he's looking at saying, how can I reduce our waste? How can I make us more competitive? And how can I do everything to put us in the driving seat? And, some people get hugely upset about that. Some people are fully behind him. But the fact is that he's taking a stance. If you see it like a line in the road,
it's a transaction.
He's taking it. Yeah, he's saying, this is how I want the country that I'm in charge of to operate, and it's different to what has been done before. So it's a fork in the road. I liken it to the angle. There's been a lot of hype and lots been going on, but like you said, I see it very similarly. It's a change of course, and it might only be it might result in a 5 to 15 degree change in course, but in 5 years' time, it's going to put you in put the world in a completely different situation. So I'm completely with you. I think it will go back and forth. It's the art of the deal. It's start with tariffs at a certain level, negotiate, see how everybody else is playing. Who's going to take a hard line with America? Who's going to try and buddy up with them? Who's going to do different things? And we'll be in a different position tariffs-wise, I think, in a year's time than where we are now. What that will be, I don't know. But yeah, this is a new course. And if Americans like it, and the result over the next 4 or 5 years is good for America, or Americans see it as good for them, and the Republicans stay in, that course may continue. So this could be, like you said, a defining moment that takes us in 5 to 10 years to a completely different way that we operate as a globe, as an economy, world economy.
Yeah, and I just think it's absolutely. So it's a gentle, but it's a gentle change in the world order a little bit there, as the US takes a slightly more, shall we call it, isolationist approach, and so I think there are going to be consequences of that in the financial markets, which means opportunities.
Yes.
So I'm quite excited by the opportunities there, because I'm not sitting there day trading. If you're day trading, you don't care what happens on the big picture, because you're just taking your signals and you're just day trading. But if you're interested in the big picture, then there's going to be some big opportunities for people who want to invest money in various different asset classes, or of course traders as well. So I think it's a really exciting time, but it is a proper change. We haven't seen something like this in a very, very, very long time. Trump 1.0, most of the tariffs were geared towards China.
Yeah.
And of course, China at this stage, at the point we're recording, has been slapped with quite a meaty tariff of 54%. I'm sure that's going to get negotiated back. But nevertheless, it's a it's a wake up call to the global economy to say, oh, okay, well, maybe we should be trading elsewhere as well, a bit more, and people are going to look at forging stronger relationships outside of the US as well. Everyone's going to still trade with the US. It's the world's pretty much largest economy, but there are changes afoot. And so I think that change equals opportunity. And I think people need to be aware that we are potentially trading through a major, like you said, it's going to be more like this. It's not a Swiss National Bank.
No.
It's not a crash. It's nothing like that. But it's a change in the way that economies are going to be dealing with each other. And so we'll look back in 5 years' time saying, oh, yeah, wow, look at what happened there. And so, yeah, my view is that we have had a stable coin in the US dollar for the last 70 years. And I think that stable coin is coming to an end. But it's going to take years and years and years. I'm not saying that there's a crash coming in the US dollar like that. But I do think that on a transactional basis, the US dollar is going to lose some of the volume going forwards, and because economies are going to be trading and parking their money not just in the US, they're going to look at other areas as well. Now that's another argument, or where do they park it? But I think this is a milestone moment, and I think that it's exciting.
Yeah. Well, if we're still doing this in 5 years, we can look back and see what happened.
Exactly.
So a different angle here, which is a question we've had in, which is how do you feel? I mean, there's been a lot of noise around this whole scenario with Trump and everything else, and this is not really what we're talking about here. We're talking about the day-to-day noise. So how do you filter out all the noise so you can be fully focused on your own trading? Great question.
I like to use the analogy, and I was literally only using this morning with a group of traders. Imagine you're on Fifth Avenue looking up towards Central Park. Knew I'd get there. Yeah. But it's Black Friday. The streets are packed out with shoppers. You can't see Central Park because it's just people everywhere. But you get in a skyscraper and you go up 50 stories, and then you look out the window and you can see all down Fifth Avenue, all the way to Central Park and beyond. You get a different perspective when you zoom out a little bit.
Love that.
When you're at street level, that's where all the noise is. You come up, it's the same street, but you're getting a different perspective. So I think that when it comes to trading, we have to be careful not to get caught up in the noise. Oh my God, did you see what the non-farm payrolls were, or whatever, or news regards geopolitical events, or like we just said with Trump and tariffs or whatever. The bottom line is we're trading price, and the argument is that price is king. Price filters out everything for us in many regards. So we need to be focused on what we're doing, because if we get too caught up in all the noise that's out there, then we lose the focus on what we should be doing, which is taking that next trade based on our trade plan, our analysis, or our strategy, whatever, our methodology. And that's what, it's nice, the noise in a way. Oh God, this happened or that happened or whatever. But ultimately we are trading price. And so we have to keep that at the forefront of our mind, because otherwise we get caught up in the noise and we're like, oh no, I can't trade this because of, Trump said this, or the central banker has said that, so we have to filter out the noise.
Love that. I think that part of the reason, people might be listening saying, yeah, how do I do it? Well, like you said, I think you've got to eat. It can be very difficult if you're day trading to step away. If you're swing trading, you're taking a bigger picture view by default. But the power, if you're a more shorter term trader, is to have that ability to step away, to go up into and have a bigger view, get away from the noise. And I think a lot of the time it's because the trader wants to know why. As humans, it's a natural thing. Well, if I was in a trade, it was heading in my direction, the market turned. Well, why? Because if I know why it turned and didn't get to my target, I falsely believe that I'm going to feel better about what happened. But like you said, if price is leading the way, sometimes it just things happen and just happen because that's what's happening in the market. There isn't always a direct link. And it's very difficult sometimes to be able to say, oh, that was because of this. Yes, certain times you might be sat there, news announcement comes out, and as a result, your position tanks and you're stopped out 5 minutes later. But I think then the risk is the trader then goes, right, okay, now I need to try and use that information so that doesn't happen again. Well, how many times has that happened and the trade's gone in your favor and it's actually worked? You're far more likely to pay attention to it when it doesn't work for you. So I think sometimes what's happening is that you're filtering the noise in and out when it either suits you or when you're trying to find reasoning or justification for what you have or haven't done. So the idea is that, take a longer term view, regardless of whether you're a day or a swing trader.
If you're someone who's if you're going to backtest something and you're trading a given pattern or setup and they're like, oh God, yeah, well, it's non-farm payrolls coming up or whatever. Well, did you factor that in when you did all your backtesting? No, you didn't. When you go back over all those charts, you're just saying, oh yes, that was a pullback on that point and it was a bull flag. I trade bull flag patterns. Great, okay, you trade bull flag patterns. But you're not going back and saying, oh, well, it was this piece of news at that point that created this. No, that's the noise. The noise creates the pullbacks in price or whatever. And if you get caught up in the noise, then you don't end up taking the trade because you're thinking, oh God, no, I can't trade it. There's a good example actually in 2023, in March, April of 2023, we had the Silicon Valley Bank crisis and then Credit Suisse went bust. And so I was trading the euro dollar at that point, and essentially the euro dollar just did a bit of a pullback during that. When you look at the chart now, it was just a pullback. And I was buying that pullback at that point. Now, if you listen to the noise at that point, you'd be thinking, I'm no way buying this. Credit Suisse has just gone bust,
Yeah, this is the end of the world.
Yeah, and all these mid-tier banks in America are all going to go bust. And if you got caught up in the noise of it, now you just show people a chart and they're like, yeah, I'd buy right there. You're the very people who wouldn't have bought right there in the moment because of the noise. So remind yourself, when you're going back over charts, if you can find out what was the narrative at that point, what was there given news out at that stage, because then it can prove to you, oh yeah, it doesn't matter what the news is. If the price is going to go up, it's going to go up. Look at where we are right now. We have just had all these tariffs slapped on all these economies, so to speak. And yes, that should be dollar inflationary. The argument, the fundamental argument is the dollar should benefit on the back of that. What's happened? Dollar's down 2% as we speak here today.
Yep.
So you got to stay with your plan and try to filter out the noise. Yes, it's interesting. The stories and all of that is interesting, but don't trade the noise per se, because that can just get you caught up or you end up just missing out on opportunities because you say, no way. Markets are bound to crash now because, just like in that example.
Trade your plan. On that note.
His name's Ali Crooks.
His name's Charlie Burton.
Trade safely out there.